Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase. In today's podcast, I want to talk about why this could be a crucial week for the euro and the Australian dollar. Let us start with the euro. As you may remember, last week the ECB hiked rates for the first time since 2011. It hiked rates fairly aggressively by 50 basis points, bringing the benchmark interest rates out of the negative territory towards zero. However, despite the larger than expected rate hike and the resumption of gas flows in Nord Stream 1 pipeline, the euro only bounced mildly higher. As we highlighted in our weekly market view publication on Friday, the euro continues to be plagued by growth concerns, uncertainty around energy supply, and weak Chinese and global demand. This week is likely to be an important one for the euro as latest inflation and Q2 GDP data for Germany, France, Italy, and Spain is scheduled to be released later this week. Now, the Q2 GDP growth forecast for all the four major countries is expected to be subdued, ranging from 0.1% consensus growth for Germany to 0.4% for Spain. Now, given the margin of error in such forecasts, it is quite possible that one of these four countries reports a negative GDP growth this week, which could dampen the investor sentiment. Now, in our assessment, 1.035 is a fairly strong resistance for the euro, followed by a resistance band between 1.06 to 1.08. That said, given the still fairly significant headwinds to the euro, we have a near-term bearish bias. Hence, we would sell any rallies towards 1.035 and use any dip towards 0.99 as a buying opportunity for a short-term range trade. Now, in contrast to the euro, we have a more bullish view on the Australian dollars, and from a 12-month perspective, we lean towards accumulating the currency. As I highlighted in yesterday's podcast, the Q2 inflation data is scheduled to be released later this week, and it's expected to show a sharp jump in inflation to 6.3% year on year. Given that Australian labour markets remain fairly strong, with unemployment rate hovering around 3.5%, markets are pricing in a 50 basis point rate hike from the RBA in the meeting next week, as well as a subsequent meeting in September. Now, should the RBA turn more hawkish in its forward guidance, that could provide a further boost to the Australian dollar. In the next few days, we see 0.698 as the key technical resistance, and any break above that could pave way for a move further higher towards 0.705. That's all from me for today. As always, if you enjoy the podcast, please don't forget to rate and like it. Thank you for listening and wish you a very happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.